Hello and welcome back to Bootleg Macro. This is an edition of our weekly chart review. We're going to start looking at the US stock market, specifically the SPY. We can see here on the weekly chart that we have made essentially a series of higher lows since the beginning of 2022. So here in what looks like April, looks like again in May, it looks like again here in August, again here in October, and then potentially here again in October of 2023. What we're looking at here in January of 2023, find ourselves in a very interesting place because the US stock market, specifically the SPY here, has done nothing but essentially chop back and forth since the middle of 2022. We're essentially at the exact same place that we were at in May of 2022 as we are in March of 2023. Now, looking over at the daily, what we can see looking more closely is that this 400 level has really been mostly a magnet for the stock market. It has gone a little bit above, it has gone a little bit below, but it essentially keeps coming back to this 400 level. So we would expect this to either be support or resistance as we look forward into the future, but we want to start taking a little look at what the sentiment is going to look like based on price action. And I'm going to go over to my weekly indicators specific for weekly sentiment, which is just below here. Scrolling down, what we see here on the weekly sentiment is that essentially it has followed what the stock market moves have done. If I scroll up so you can see it a little bit, we can see as we get this big push of bearish price action just at the end of 2021. We get a little push back up where we're getting bullish sentiment a little above 50 around the end of 2021. And then essentially what we begin is a major sell-off, essentially where bullish sentiment has fallen below 50%. What we're seeing then is essentially that the market can't sustain any bullish movement. It can't sustain the ups because it consistently wants to stay below 50% bullish price action. And when we look at where the market is today at the end of the past week, we're essentially at 51%, which means that we have a little bit of downside with a little bit of upside, but essentially what we're going to be expecting here is the wiggle around 400. We'll go ahead and keep scrolling down, look at the weekly volume. We can see here on the SPY, the volume has been essentially higher than it has ever been, especially considering where we were in 2020. The beginning of 2022 here, we can see a humongous volume spike that essentially set the tone for everything post 2021. We see volume spiked here in October and September, and then we see we've got a recent volume spike in the past week. That was the SVB bank collapse. That was essentially the banking crisis that we are in the midst of currently still. So this would give us an indication that we could expect increased volume profiles on the weekly, which means that if we're looking at the daily, we're going to see some huge breakouts of volume. Now, scrolling over, looking at daily volume here, this is going back to July of 2022. We can see exactly what we were pointing out on the weekly here, this big blow off, essentially this middle finger of volume, which came out of nowhere relative to what we had seen in the previous few months. This is the week here. This is the SPV blow off. This is the middle of March where people were freaking out about a banking crisis. We see on the daily, we still have elevated volume levels, especially when we're looking at it from a trending perspective. The volume is increasing. That's not a great signal when you're thinking about if you want to see upside moves, because generally what you're going to want to see in an upside market or a bullish market is going to be low volatility and low volume. It's going to be a grind higher instead of what we see normally when it comes to selling, which is a waterfall or an elevator down. Now, scrolling down and looking at the price to volatility correlation here, what we can see is that the SPY volatility continues to fall and the correlation continues to fall. That would actually give us an indication that from a price perspective on the daily, we would expect upward moves at the moment, unless what we see is the correlation start to rise and go positive like it was back here when you had falling in February. So for now, what we'd expect at least to probably see a little bit of an upward bias. If we look at the weekly volatility here, what we can see essentially is that we have correlation, which is rising, we have volatility, which is falling. Not necessarily a great signal for the long-term trend, but does confirm what we're expecting since the beginning of 2022, which is generally a bearish bias. Now, the market loves to go up. That's the preferred method of the market, up and to the right. That's where the money is made. That's where the bonuses are paid. And that's where the IPOs get really laid out for the entire market to take. Right now, what we can see is that generally we would be expecting a downward move, but again, bearish counter trend rallies, which turn into bull rallies where you see 20, 30% in a month or 6 weeks or 2 months. That's the kind of stuff where you can get your account ripped up if you don't pay attention to the short-term wiggles of the daily price action. What I'm going to do here is take a quick look at what I view as the non-sentiment trade range. This is the weekly version of it. So essentially what you're thinking here is it's similar to like a Bollinger Band. You're going to take what is a probabilistic outcome of what price action you could expect using volatility for what size range you should have. So again, as I was mentioning earlier, you can see back in 2020 and 2021, we had essentially a very stable range here between the green line and the red line, with black being price. That's because when the market is in a bullish formation, volatility tends to fall because it just grinds higher. Where when we start to see these moves down, they get very jerky, the volatility blows out. Your wide ranges start to get essentially available as a probability of outcomes, where you can be up at 450 1 week, and then by the middle of 2 months from then, you can be down at 391. That's the type of action that you can expect. So even though we've gotten recent price action all the way up to 412, it looks like here at the beginning of February, we got very close to the top of its range. We could still expect extreme down moves, things that go below the green line, similar to what we saw here back in June of 2022, or what we essentially saw here in May of 2022, or at the very bottom like we saw in March of 2022. So as we see this, the volatility is essentially unwinding from where we were. It's actually falling, which when we look back up, it makes a lot of sense, because the blue line being volatility here is significantly lower than it was in the middle of 2022, when you see volatility going way above what looks like 20 here. Currently, volatility on the weekly is just around 12. So you can see that volatility is definitely coming down from where it was in 2022, but that doesn't mean volatility can't spike again. Go ahead and look at the daily non-sentiment. So the daily non-sentiment range, very similar to what we see when we just look at the traditional chart. Everything is essentially around that 400 line. Volatility is getting relatively tight here in this SPY. We've seen a little bit of movement off of this low at the very beginning of March. We're all the way up into the mid-90s, but again, it's not like we've gone anywhere. We were at 390 in February or in September of 2022. Started this period, we were at 394 in July of 2022. Essentially, it's been sideways action in the SPY and really gives us no indication of what direction to expect. We just have to use historical norms that the market generally wants to go up, but we have to pay attention to the signals of today, and that the volatility on the weekly and on the daily is showing that we can still see further downside. So just look for catalysts, pay attention to your stops, keep a close eye, and just always remember, the market can do whatever the market wants to do. It doesn't care what any of us want it to do or what we think it should do. The market's just going to do what it does. So now we're going to take a look at the Qs. First, we're going to take a look at the weekly chart here. What we can see is essentially the Qs look like they've either started to bottom, or at least they're in the process of consolidation. The 300 level on the Qs seems to be very, very strong on the weekly basis. It looks like we've essentially come back to where we were in September of 2020. We see that there is relative strength in the Qs. Let's look at the daily. On the daily chart, it appears that what we can see is that if we get a little breakout here above the 313, 315 level, we could probably run up to 330. There is a strong support around this 300 level, either as resistance or maybe we'll find out as support going forward. But the 300 level makes you feel very comfortable, essentially using that as either a stop or a trend break of if you go short below 300 and you stay long above 300. Let's look at the sentiment. The daily sentiment indicator here. This indicator breaks down price action and essentially gives you a percentage of bullish versus bearish. So red is bearish, green is bullish. If we scroll up a little bit so we can see the chart as well as the sentiment indicator, you can essentially see that the breakouts here in price, when they're going up, they correlate to what the sentiment is going on here. So you see these lows. When you see this extreme candle on the 13th, you see it kind of come higher, you can see it come down. Essentially, this indicator works that at 60%, things will start to lose their bullish demand, and at 40%, things will start to gain bullish demand. You really can't go above 60% bullish percent, as well as you can't go below 40% bullish percent. When I look at where we are right now in the Qs, this rounding of this moving average, the bullish percent breaking out over 50%, based on what we've historically seen that we can get significant pushes, I feel very comfortable being long the Qs at the moment. Let's look at the weekly sentiment indicator. The weekly sentiment indicator, what we can notice, especially looking at this chart, it does reflect these bullish moves where we're getting a little bit of bearish counter trend rally action. But the most important thing to me is that this moving average is starting to kind of smooth up and potentially could get above 50% itself. We've seen a significant breakout in bullish price action in the Qs recently. It is reminiscent of what is either consolidation and or a small bullish trend. That could be intermediate term, that could be long term, that could be a secular trend. I have no idea. All I can say is that right now, looking at this versus the SPY, I would much rather be long the Qs. Now let's look at volume. The weekly volume, it looks like it's had obviously a little breakout based on the banking crisis recently, but we're not seeing these extremes like we saw at the very end of 2021 and in the beginning of 2022. Not seeing the extremes like we saw obviously during COVID, during the March waterfall in 2020. Let's look at the daily volume here. Daily volume, it looks very similar to how the SPY looked. The one benefit here I'd say is that this probably is topping out in terms of this moving average here. For where you expect volume to move, 75 million daily volume looks like essentially the cap normally. We got right back underneath that when it came to the price action directly after the Silicon Valley Bank crisis and the fallout of the other banks that also collapsed. Now we're going to look at daily volatility to price correlation. Now thinking about volatility, this is going to be a derivative of price, which means that essentially there's an underlying mechanic driving price action. The red line here is going to be price volatility. The blue line is going to be price correlation to volatility. So when we see a breakout in volatility here, like we saw on Friday for the Qs, and we see that correlation is negative, that would incline to us that price would fall that day, specifically because correlation is negative and volatility looks like like it's starting to at least bottom. It's coming off of, because this is zero bounded, you can't go below zero. So you get these nice sine wave kind of looks essentially. It's just up and down, up and down. So when we're coming off a bottom, we do know that we're going to get, if it may not be big, it could be small like this little hill, could be big and sustained like this hill, could be large and sustained like this hill back in 2022. We know that at least from this level, we're going to get a sustained move higher, potentially a plateau, and then a rollover. So we'll want to watch correlation, because if correlation starts to rise and volatility is rising, we would expect some upward moves in the Qs. Let's look at weekly volatility and correlation. Again, here the blue is the volatility, the red is the weekly price correlation. We're seeing volatility continue to rise, just like we're seeing on the daily, and we are seeing correlation, which is currently negative, but could start to move up. And here's the thing, the correlation is currently negative 60% essentially. If you get any move positive, even to negative 50%, negative 40%, correlation can still be negative. It is the rate and the change that is the most important thing, because even going from negative 60 to negative 50, while volatility is going to continue to climb, at least for a while here, you would expect to see intermediate to longer term move in the Qs in a bullish direction. Let's look at the weekly non-sentiment trade range here. This is going to be the breakdown essentially of probability of outcomes. So think about Bollinger Bands, think about Keltner channels, think about standard deviations. This is going to be essentially the range of probable outcomes. Right now, we already see the Qs is essentially at the top of its range. The very top on the weekly is 318. We see that it is at 310. So when you're looking at a transformation from either bullish to bearish or consolidation to bullish, you want to see things start to tap the top of their range. Very similar to what we saw back here in 2020. We essentially stayed near the top of the range the whole time. And that was the indication that you just wanted to buy dips. So seeing that on the weekly, it is starting to get back to the top of its range, and it's staying there. Like, it's been up there since the beginning of February. It had a small pullback down to 288, but now it's back to 310. Very positive if you're thinking about a long position in Qs. Let's look at the non-sentiment based trade range on the daily for the Qs. Again, this is showing the exact same behavior. It is hugging the very top of its range, which is a great signal to see. You still want to buy whenever it gets to the bottom of its range, but that doesn't mean anything longer term. It just means that right now this is exhibiting a lot of bullish price action. Now we're going to take a quick look at the IWM, the small caps. So here's the weekly chart for IWM. Essentially what we've seen since the beginning of 2021 is essentially sideways action. The very end of 2021, we saw a fake out to a breakout, and then essentially a bearish move down to the beginning or middle of 2022, and essentially just sideways action. The concern for the IWM obviously would be if you break below that 150 level. You have no idea where the price could go there, but I guess this was essentially the top in 2020 before the big COVID crash. So you maybe have support here. That's a concerning looking chart. I think it has a lot of banks inside of IWM, or at least more regional banks than the SPY or the Qs, obviously. So this is going to be reflected in the concern and sentiment in the market at the moment. Let's take a look at the daily chart. The daily chart is essentially a range trader's dream here. If you've been playing the 200 level all the way down to probably what is the 160s or maybe high 150s, you've essentially had fun. You've made a ton of money either selling calls at the top, selling puts at the bottom, buying puts at the top, buying calls at the bottom, whatever it is your specific trading strategy is. This has essentially been a range bound move. I would be concerned about this because the recent move that we saw on Friday looks a little concerning. It doesn't look like a bottom when something breaks below. I'm not a big chart candle, I don't know, voodoo guy. When I look at that, it doesn't look great. Let's look at the daily sentiment here. Using this as a proxy of what kind of price action we're seeing under the surface, we can see that based on where we are, I might actually want to buy this once we see a little bit of bullish price action. Now that I look at the sentiment, we are way down there. The bullish sentiment's at 40%, and it's come off of a low essentially of 35%. And as I mentioned earlier, these oscillators can't really get above 60. Like that got to 64 and then promptly came down. It got to 60 or 58 here, then promptly came down. We really can't get below 40 very much, generally, unless you have a crisis, you have a banking crisis. So you'd expect at least some bullish price action from here. So the bullishness is about to break above this moving average, which is a great signal generally for going long, at least for a period of time until there's a break below. Let's look at the weekly. The weekly sentiment here for the IWM looks exactly like the chart. Essentially nothingness, just chop left and right. When we look at how this move has gone since September of 2021, which was directly in here. So this low of September of 2021 was the precursor letting you know that you're going to get at least some move upward. We can see the reflection in it here. This is on the 12th of 2021 at only at 50%. So that really lets you know that even though that was a breakout, that wasn't a very strong one. And then we've just seen it essentially oscillate around 50% ever since. The market wants to be in balance, but when you get moves like this 2020 move, when you saw small caps just absolutely rip from down at 41% up to a sustained 60% for a while here, that's the type of move you're looking for. or you're looking for the reverse if you want to go short. But when the price action doesn't necessarily align, just because sentiment is bearish doesn't mean that price action is going to align. Markets can levitate for a lot of different reasons, even though everyone in the market is essentially showing like, I don't want this as much as I wanted this before. Let's take a look at the volume here in IWM. The IWM volume, at least on the weekly, we can see a large breakout and looks like an inflection here in IWM volume. That's not a great signal if you're thinking that this is going to be a bearish looking market. Increases in volume generally are bearish. What you want to see is a slow grinding volume as you go higher generally. Let's look at the daily volume. The daily volume, this is a way different look than what we saw on the Qs or the SPY. Volume here in IWM looks higher and looks sustained higher. We are consistently over 40 million shares traded each week, which is a far cry from where the general average was, or is capping out at 40 million. So we'd really want to see volume continue to fall to see any bullish sentiment kind of return. So we'd be looking at very low volume days to potentially buy this, at least me. Now, when we look at the volatility of IWM on the daily, we can see the volatility has continued to break out. This is exactly what you're kind of expecting whenever you see a volatility hit its bottom here, like a 2 or a 0 or a 1. When it starts to break out and correlation goes negative, you expect the price to fall. And that's what the price has been doing. So price has been falling consistently on the daily. If we get a resumption of correlation returning, but then volatility starts to turn over and fall like it did here in February, that is not a great signal because that would be a sustained downtrend, especially on the daily. Let's look at the weekly volatility here. Weekly volatility looks incredibly low relative to where it came from in 2021 when you were up at nearly 20 vol on the weekly, or even when you were at like 15 vol consistently in 2022 in the summer. We are at probably like 7 or 8 vol. Looks like 6.8 right now. That's very low volatility, and it is falling and correlation is rising. So you would see that currently you're going to have a bearish bias long term. And then when we look at the IWM, at least the trade range from a non-sentiment based weekly, you are at the bottom. I mean, this is a signal, at least to me, based on how I believe in my own indicators, is that I would want to buy this at least for the short term. When I say short term, that could be 2 months. I mean, this is the weekly chart, so you could go all the way back up to 200 very easily. It shouldn't surprise anyone, but that would be a great opportunity to short, it looks like, because it looks like 200 again is essentially a level that you've been able to short since a year ago in 2022. Looking at it on the daily, one of the things that always shocks me about the reflection of a non-sentiment trade range, how much volatility can actually be expressed here. When you see the two bands get really tight like this, that means volatility has fallen. And when we look up, we can see that this is when volatility was all the way down here at the beginning of March, down at that, I think it was 2. And then when it starts to really expand like this, you see the breakout where the highs go higher, the lows go lower. But the speed is what is always shocking to me, because you'll get these sustained periods where volatility essentially falls and it gets kind of tight, like volatility is falling, so your range gets really tight. But then you just get this all of a sudden expansion that expands the range, and now your probability of outcomes has gone from what you might expect of 2% range to 5% range. And that is a huge change depending on what position you have, how you position size, and how close your stops are. But this has just been a general breakdown from the weekly review of what I consider to be the key 3 elements of the US stock market. You're looking at the SPYs, the Qs, and IWM. Feel free to like, subscribe, and comment below.